Hi everybody, this is Gary Dean and this is our Nut Video Report for Wednesday, December 16th, 2015. So, Fed has come and gone, pretty much done exactly what the market was expecting her to do. And, we saw the normal computers, moving up and down and shaking everybody out. And in the end, they rallied the markets. It was kind of funny because I was going back and forth with some people in the trading room, and they were, saying, congratulations on the trade. Trading the Fed day is hard, and what I would kind of explain to them was that it really wasn't hard for me because I had taken that third of a position off yesterday. So holding on to the ones I had, there was, one or two things that were going to happen. One was they were going to drop the S&P after the decision, which it looked like they were going to do. And I was going to wait for, where some support was and buy that third back that I sold yesterday. Or they were going to jack it higher, and I was just going to hold the third that I had. And, obviously they did a little bit of both, but the move down was really, really short-lived, and they rallied it. So I honestly didn't even really pay a whole lot of attention to what the Fed was doing because it didn't, I pretty much had my plan in place. If they dropped it, I was going to be buying. If they rallied it, I was just going to hold it. So we're probably going to get a lot of Santa, rally people jumping on board today. There's a couple scenarios that I could see playing out. One is most of them, were just either cash or short and closed their shorts yesterday or got squeezed out Monday, whatever it is, but have been waiting to get long until after the Fed meeting, and then from there they were going to jump. They probably didn't have a whole lot of time to jump in, so you have probably a big part of it that are waiting for a pullback to jump back in. So if they're going to be mean, which we know Wall Street is very mean to, especially to retail traders, they'll continue it higher and make them chase right before they're about to turn it lower. The other thing is we do get some backing and filling. It kind of goes sideways, but I still believe that, no matter what plays out, say the remainder of this week, we did kind of start the Christmas rally. And one thing, really probably the best way to look at this market isn't, how high we can go. I think the best way to look at it is, the worst of the selling is over for now, meaning that, this drop was it. It's done, so now we may go do some, backing and filling, but you want to be a buyer because most likely we're going to take these highs out and head someplace up here. But I wouldn't, I'm still not, throwing my all-out bullish hat on. I think that it's not going to be as easy as a lot of these, now Santa rally callers are saying it's going to be. It's going to be very choppy, and one reason, I'm going to say this, we rallied 93 points since Monday's lows. So a big part of the drop has been made up already, and we've been having trouble in this area all year. So I don't think that, can we make new highs? Absolutely. I'm like I said, I'm not saying where this thing could turn. I'm not bearish on the markets. I'm just saying, take this for what it is, and these are computers just going crazy. This isn't everybody, really humans that are saying, oh, I got to get in this market now. These are computers that are driving it, and typically they're, seeing what's going to trigger somebody to jump, and then when they do, they're going to do the exact opposite. So enough of that. Let's go on. Made it over to moving averages right here. Most likely just say resistance-wise for just from these highs here is looking right around the 2094. So about another 20 points higher on that. If we do start making higher highs here, guess what? These divergences are going to be absolutely enormous. So that's why I'm saying, even if we head higher, don't get overly bullish on this market. Forget what you're hearing through these, the financial media people. It's all blah, blah, blah. Just know that, heck, even if they came all the way up here, 2117, 2130, just know that this is most likely probably going to be the best selling opportunity you've had. But we're long right now, so we're going to ride this as long as we can. On the 60-minute chart, getting close to the real overbought levels. We're at some resistance right here. If they pop it above, we have some more at the 2080. Now, if they rally through that, then we're probably going to see a move somewhere up at the 2094, and I may just take profits. I'm not sure. I have to wait and see on this. It's been, it's a very, very big move. We are starting to see some divergences, but we could see, maybe a pop up to, this area, the 2080, 2094, and then a pullback. So what I'm showing you here is a possible inverted head and shoulders that we're going to get, all the orangutan bulls, winning themselves over because it's a really big one. And that would say that we could get a move up to this 2090 area, drop back down somewhere to the 2050 in this area, and it would be this is your left shoulder, this is your head, and this will be your right shoulder. And the reason why I'm saying they're going to wet themselves and get all crazy is because the target will be all the way up into like the 20. I mean, put it this way: the whole body of this thing is basically 110 points. So if we broke through it here, we're looking at somewhere up at the 20, closer to 2200 level. But remember, this is taking place at the top of the top of the chart, so it's going to be a head fake. And heck, it may get up there, but I'm just saying, if we see this and where this chart is here, don't buy into those targets. It's probably going to come up and then come back down again. But right now, short term, 2095, I'd say 2080 to 2095 we want to keep an eye on. If they pull back, I'm anticipating that you're going to find buyers here to try to farm that right shoulder and then probably rally into the end of the year. On the 15-minute chart, I had showed you a 5-wave count, said it would make more sense if they pulled back. Really didn't do it, so most likely this count, it's still in play, but I don't even want to confuse people with it. What we really want to keep an eye on a drop, 2057. I think the 2041 is important. If they break that, then something else may be going on. So really the first two spots, 2057, 41. This is what the bulls have to defend. If they do, most likely just stay on the bullish side, buy dips, and we should head higher into at least the Christmas time area. So with that, have a great night, and I'll talk to you guys tomorrow.